Hello and welcome to another update video about Ethereum. A lot has happened in the markets in the last couple of days. Ethereum drops a little bit further, and I now have to get rid of the impulsive counts. We now go to the diagonal counts, and the idea of having here a 1-2 setup, here a 1-2 setup, here a 1-2 setup, here a 1-2 setup, even though it's technically still valid, I can't justify it anymore. It would just be way too bullish. It's completely unrealistic, and we're going to the alternative counts that I had in the background that we talked about already in the last few videos, that this might all morph into a diagonal pattern. And I'm going to take those subwaves out because they are getting we don't need them anymore really, and also want to keep the chart tidy. So I'm going to take a lot of those subwaves out now, and we want to look at what are the two main possibilities. If you've watched already my Bitcoin video that I have just released, I did make the channel members earlier aware of the changed wave counts, basically about Bitcoin, and now I'm changing Ethereum as well. This is necessary because we are still in a corrective pattern, or as we can see here, in a diagonal pattern. If you are either and I did explain it in the Bitcoin video as well, but not everybody might watch that. If you are in a market situation where you have a structure that is either a diagonal pattern or a corrective wave structure like an ABC, and to be honest, in a diagonal pattern you very often find ABC structures as well. If that is the case, then you have to be flexible. You have to have alternative counts. The more you have, the better. Shouldn't get too many because then you get confused. But you just have to be flexible, because those diagonal patterns, they are not necessarily very reliable. They sometimes retrace a bit more than is ideal, and they don't adhere very well to the fib levels like in an impulse. In an impulse, our life as Elliott Wave analysts is quite straightforward. We're always looking for impulses, so if anybody wants to trade most likely wave patterns and have a high rate of success, trade only impulses. Mainly wave 3s are good. But if you are in, or even a C wave, but if you are in a diagonal pattern, you either trade, but you have to understand that the success rate might drop, which is not a problem if you have your reward to risk ratio properly sorted and everything, and you set your stop losses properly, or you stay out of the market entirely. So yeah, please understand that changing wave counts is necessary. It's absolutely needed. It's crucial. We want to stay on top of the market. As the market changes and makes some wave counts unreliable, unlikely, or whatever. So okay, if we say we are now in a diagonal pattern, how is that? How is it going to work out? There's two patterns that are very similar now, or basically the same as on the Bitcoin chart. So basically that's the advantage of this. It brings basically Ethereum and Bitcoin back on one level with the wave counts, and that's great. So I see this as an ABC to the upside in a wave 1. That is my main count. Let me take those subwaves out completely. So that's my main count. A wave 1 to the upside of the 22nd of November low. We have an ABC here to the upside in a wave 1. We came down in a wave 2. Now that was a corrective wave pattern before anyway. It's just that before we had 1-2, 1-2. This is morphed into one larger 1-2 setup in the diagonal. And we are now working on this third wave to the upside. All of that could be part of a corrective C wave. So basically the larger pattern, that hasn't changed at all. It's just how we get there has changed. A, B, C is the corrective pattern within a larger wave 4. And we should see one more dip afterwards. That is sort of the idea. And within this corrective pattern, within the C wave, which is the so-called ending diagonal pattern, we've got here 5 waves, of course, but the 5 waves are diagonal patterns, and each of these subwaves consists of A, B, C. So if I, in a diagonal pattern, can count wave 1 as ABC, I have to be able to count all of these subwaves as ABC structures. So we've got an ABC here, ABC, and then the C, the wave 3 is currently evolving in what I believe would be an ABC pattern as well. So this is the same count as Bitcoin, so I would consider this an A wave, currently coming down in a B wave, which we should nearly be sort of finishing with, and then the C wave to the upside would be the rally. So as you can see, it's not much different from my previous scenario where we actually had a 1-2, a 1-2, 1-2, and another 1-2 setup, because also here we would have found support here as well. It's just more important to go to the diagonal pattern first of all to justify or to explain that, you know, this is getting into critical, it's getting less reliable, so yeah, so to speak. So those retracements and everything can be a little bit less predictable, and yeah. So this is and it's important for the targets to the upside later, yeah. But yeah, this is sort of the main count. 1, 2, 3, 4, 5 hasn't changed at all. It's only what happens in wave 3 and in the subwaves has changed. Now, what is the key support level for the B wave? Well, ideally we are finishing now here somewhere at this trend line support. I mean, it's not a very well defined trend line, but you have one touch point here, maybe here, yeah, here definitely, and maybe here now if we hold. We could move up from here, so we could get a bounce. At the moment, it's not too convincing yet. And if I zoom in, where should we find support here for this B wave? Well, we should find support either ideally here at 1263, sort of in that area, yeah, which is a 78.6% fib level, and should really not drop below 1240 or 1241. But yeah, other than that, it should really start moving up very, very shortly if this is the correct wave count. If we lose, what happens if we lose the 1240 level? Well, then based on the latest count that I also have on the Bitcoin chart, we've got another pattern which is sort of similar to start with. It would be an A wave here, and I'll make that a different color in a minute. And we would come down in a B wave, also a different diagonal pattern possible. And we are moving up in C. It's just a different structure. I'll make that the red count. The red wave count would only produce 3 waves, whereas here the yellow count would provide 5 waves. So the yellow count might be a bit more bullish short term. In both counts, I would expect a strong retracement afterwards, whereas the red count would most likely really take us below $1,000. In the yellow count, we actually have a chance that we are holding support and that this is already a bullish breakout pattern. Yeah, we don't know that yet until we have all those 5 waves complete. But what you need to understand is if we're in the red count, so if we drop a bit lower and we get into the red count, we can still rally short term, but we have a much smaller chance to actually create a breakout pattern out of this. Because while my expectation is still to make one more low afterwards, if it is going to be a higher low, then we could have a breakout pattern, but this is getting much less likely in the red count. And what would be the support area for the red count? You can specify that as well. That would be it would go down all the way to 1125, yeah, plus minus a few dollars maybe. That's here between the 78.6% fib level and the 50% fib level at 1190. So this would be the support for the red one, and for the yellow count, the support, we can also add that now to the chart. I just don't want to make a mistake here. So for the yellow count, we're already in the support area. Yeah, that would be basically in here. So between, yeah, it has to be here now. Yeah, between the 78.6% fib level at 1263 and 1253. Shouldn't really drop below that. In the worst case, holding 1241 is fine, but then below that we are most likely in the red count. Okay, so yeah, that's how I see this. Quite volatile, again, quite choppy. We see bulls and bears failing here every few days. But overall, I think the bulls are still here in control at the moment, short term, because we are still in a moderate short-term uptrend. But yeah, if this all works out in the primary count, then the next wave up, the wave 3, should add quite considerably here to the price, right? It should be quite a bit of a rally, because it would be a wave 3, basically a wave C in a wave 3. It should actually be quite strong. What would be the target actually? Maybe we can look at that before we finish the video. Here the target for the C wave of 3, we'd be looking at the 1.618 extension 1468. So this overall rally might be finished somewhere around $1,500. Yeah, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. If you're interested, maybe check out the trading course we offer on morecryptoonline.com, and also make sure that you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.